Investments in CFD contracts. Stock trade and gambling. Pro et contra. In today's world, investors possessing big business are looking for various ways and schemes for its extension. You may often encounter such announcements about stocks and competition in mass media for the best business plan, when businessmen invest voluntarily into the economically established and promising business. Despite huge risks, many businessmen gain dozens percents within a day. Risk-free business income rarely reaches 1% a week or a month. One of the risky ways to quickly compensate investments with a possibility to estimate the risk of the investment is stock trading. The stocks of huge companies, the worldwide brands, may change their value in one day up to dozens percents in both directions. Fluctuations of stock's value provide to experienced traders double funds. However, the risk to decrease it in 2 times is also possible. And only wise analytic forecasts may help a businessman to become rich. There is also another financial instrument, contract for difference CFD, that is an agreement between two parties to switch the margin in the contract value to the price for opening and closing of this contract. Financial instrument CFD is a kind of an international financial market model in the scope of trade markets. Contract trade for margin permits an investor to gain the higher income with the help of leverage. People who do not possess an amount necessary for buying appropriate stocks, investor may buy CFD amounting $1,000, the rest $10,000 broker will loan him. It is clearly that investor will not become stockholder, but if he were, the compensation of $1,000 stock's value would be only 10% of the income. Contract margin trade on margin prices constitute 100% compensation. It is out of the question that you should take care of the risks. If investing in any business, it is important to figure out in advance all possible losses and damages, and for that purpose it is necessary to have a proper education and to be aware of the history of such transactions. It is even possible to have a consultation from specialists to analyze the situation. One of the advantages to trade through CFD is the guaranteed execution of stop orders in any price movement. The difference between trading and speculating is essential. When buying stocks of the company, you gain the status of a real co-owner of the company. Stockholders of a successful company may expect to gain the compensation. While trading on CFD, such possibilities are impossible. On the other hand, when comparing interests from gaining the certain compensation and time waste on their expectation, you may really have the best way to make investments. The main task of the investor is to forecast the direction status of the market, to forecast the tendencies of market movements, to obtain reasonable forecasts in order to avoid investment losses and to maximally decrease this risk to your advantage. Experienced investors may in such case use the strategy of hedging risks. Investor opens a short position on a margin contract to his holdings of shares and recompense losses arising from the fall of the real fund's value gained while trading through CFD. While trading through CFD, investor has a possibility to transact business on the financial funds offered. Margin contract trade is not bound to making an agreement on depository service.